The market continues lower after the dead cat bounce, and the tech sector is still looking relatively the strongest. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart. See what's going on in the stock market today. All right. Today's SPY was down 1.55% after we did get that strong dead cat bounce, and now we're getting that rejection from this negatively sloping 20 simple moving average, and we did close back down below the 200 daily moving average. So again, this is still a very risk-off look in the market below 393, but you can instantly get more bullish if we bounce next week and break above that resistance and clear above the 20 daily moving average. So next week, watch critical resistance at 393 and 396, and then above that you're looking for 400, and above 400 we're looking for the gap fill at 408. If we continue to get rejected, this does just look like another lower high rejection, which is completely what you're expecting to see in a downtrend, which means we'll be looking for the next lower low eventually down here at 380 and 377. Below 377, we see full-blown panic selling, and we're likely going all the way back down to the October lows, but we'll cross that bridge if the price action tells us to. So right now, this is more than likely going to continue to be a trading range between about 390 and 393 until we get a break of that range, and that should set the trend direction. On the NASDAQ 100 triple Qs, we were down 0.47% today, and all things considered, that is still a very relatively strong tech sector. As you can tell from the price action, we were outside the upper Bollinger Band yesterday, and we're just too far extended, so there's no surprise we're seeing a little bit of cool down. That cool down was not in the form of impulsive selling, so there's definitely relative strength here, but we do need to clear above this resistance at 307 and then 312. We clear all of that resistance, we have a very strong bull trend that takes us up to fill the gap at 322, and the critical downside support remains this bull breakout at 300. If we break below 300, look for the 20 daily moving average at 296 and the neckline breakout of support at 294. On the Dow Jones, we were down 1.47% today, and again, we're continuing lower after the dead cat bounce and rejection below the underside of the 200 daily moving average at the critical resistance zone at 324, and we're right back down to the critical support zone at 318. If we break 318, we're looking for the gap fill at 311 and a continuation of the downtrend. And if we break resistance at 324, we're looking for the lower high rejection somewhere between 327 and 330, and we're not getting bullish until we can clear all of that resistance and show this downtrend is ending. On the Russell 2000 IWM ETF, we were down another 2.7%, again getting rejected after that dead cat bounce back up to resistance at 177, and we're right back down to critical support at 170. If we break 170, that's a lower low below the December low, which means we can likely go back down into the 160s to the October low. The bulls need to break above 177 to get more bullish for the gap close at 181, but even at 181, there is the possibility it's just a lower high rejection, and we do have a strong downtrend. On the ARKK ETF, we were down 1.43% today, and ARKK did hold up above the support breakout zone around 38, but still getting rejected from the resistance at 39. The bulls need a higher low, higher high breakout back over 40.5, and then we can say we're breaking the downtrend. And if we get rejected here, it'll look like a lower high rejection that could take us back down towards 34.6 and then the gap fill below 32. On the VIX, we were up 10.97% today, so the VIX is still in this bull trend, and it's still a very high VIX, now above 24 yet again, and it's going to remain a volatile market while the VIX is above 20. We need to see the VIX crushing in a very serious manner all the way back down below 20 to get any confirmation that we're getting out of this bear trend and starting to build a bull trend. On Bitcoin, we're currently up 7%, and Bitcoin is getting the continuation of that high volume bullish breakout, which is no surprise because the Bollinger Bands are now expanding. Remember, a few days ago, I said Bitcoin wanted to go higher, but couldn't because the bands weren't expanding. And now that the bands are expanding, the price action is pushing higher. Anytime you get impulsive buying and corrective pullbacks, that is obviously bullish. So there's a very good chance Bitcoin is going up to my next price targets at 28,000 and then 30,000. You could stay bullish as long as we have the breakout above 25,000, and below that, we're likely losing the bull trend and going through another correction. On Google stock, we were up 1.3%, and Google is technical analysis perfection because it is doing everything it was supposed to do. Remember the bull breakout above 95.6, I said we were likely going up here to 102, and that is exactly what happened in only 3 days' time. From here, you're looking for strong resistance, and we're outside the upper Bollinger Band for 2 days now, so there's a good chance we need to cool down. In the most bullish scenario, we would cool down to a higher low somewhere right around 98 to 99, and then push through that resistance and hit more upside price targets. So on a bull breakout above 102, you'll be looking for 106 and the gap fill at 110, and critical downside support zones will be right around 98 to 95.6. On Amazon stock, we were down 1.09% as Amazon was also just getting way too far outside that upper Bollinger Band and was just due for a cool down, and this is not necessarily bearish because we did hold support at 98. If we break support, we also have support down here at 96 and 94, and it's only if we lose all of that support that we're likely heading lower. Above 98, we're going to test critical resistance at 102, and if we break critical resistance, we'll be looking for a run up here to 109 and then 115. On Microsoft stock, we were up 1.17% today, and this beast is just continuing higher after that bull breakout above the resistance at 274, and we hit our next price target today at 283. Above 283, we go to 290 and then 296, and critical support will now be 274 and this support trend line zone right around 267. On Nvidia stock, we were up 0.72% today, and Nvidia is finally hitting that gap close price target, and it did gap up, so now we have another gap to fill to the downside just below 256, and there's a very good chance this is the blow off top in Nvidia that we needed to squeeze out all of the shorts before we go through a correction. So now that Nvidia is hitting my upside price targets, we could still squeeze a little bit higher towards 267, but then I would be calling for the very good chance of a correction that could take us back down towards filling this gap at 211. Even though we're going to have a ton of support on the way there, we need to watch around 244, 237, and 227. On Tesla stock, we were down 2.17% today, and Tesla is starting to look like it's just getting another lower high rejection after it's trying to go down and fill this gap at 146, so you need to be very cautious being bullish in Tesla while it's below 183. Below 183, we need to test support at 173 and 167, and if we lose that support, we're looking for the gap fill below, and we're only getting bullish now if we can clear above 184 for the attempt to retest 197. On Apple stock, we were down about 0.5% today, getting a little bit of a rejection right here at critical resistance at 156, but not necessarily impulsive selling, so there's a good chance next week we can try to break that and validate this inverse head and shoulders that sends us to 163 to 170. Critical downside support will be right around 153 and 150. On the financial sector, we were down 3.22% today, so plenty of more trouble in paradise, and this was simply just a dead cat bounce up to fill the gap and more impulsive selling. Now keep in mind, this is a black swan event in the financial sector, so we have no way to know where this is going to bottom out, but eventually when this does turn the corner, there is going to be a lot of upside potential, so this is something you want to keep on your radar. On the industrials, we were down 1.64%, continuing lower after the dead cat bounce, and I still think we're going down here to test this support at 95. On the healthcare sector, we were down 1.29%, getting rejected from that negatively sloping 20 simple moving average and a very strong downtrend that's going to continue to be a bear trend while we're trading below 129 to 130. The energy sector was down 1.57% today, continuing lower, trying to fill the gap down here at 73, but there is the possibility we fill the gap at 80.3 before we go any lower. So jumping back over to the S&P 500, without a doubt, a lot of those dead cat bounces are playing out as we continue to see more downside today. But keep in mind, a lot of this is due to the financial sector, and that is why you are not seeing that relative weakness in the tech sector. So as soon as these headwinds blow over, we could get a very impulsive bounce. So you need to be very cautious if you're shorting this market and manage your risk right here at critical resistance. In my opinion, you're much better off focusing on the triple Qs and the big tech companies that are showing relative strength, but obviously trade whatever you're comfortable trading. You want to trade with other price action traders? Come join us over at the Stock Channel Trading Discord community where you get access to all of my intraday updates and analysis. You find out how to join by clicking on the link in the description of this video. I also have my own trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.